if this persists, the change in Alberta's finances from the beginning of this year to where we are today, extrapolated going forward, is in the range of $6 to $7 billion. This is not business as usual.
And good morning. Oil prices trading below $63 U.S. a barrel this morning. And with that, our premier, as you heard, warning that belt tightening is on the way. Jim Prentice says all Albertans are going to feel it. He's not saying yet which measures his government will be taking to deal with falling energy prices, but the premier does say we will not see a sales tax. To an audience of about 700 business people in Edmonton, Prentice reiterating that there's no easy solution to this fiscal crisis. Prentice says the projected $933 million budget surplus right now is in deep, deep jeopardy.
But at this point, we're finishing off this fiscal year. We're being very prudent in terms of the level of expenses. The budgeting process for next year has begun, and these are issues that we will need to hear from Albertans on.
One of Calgary's top economists says Albertans should be ready to handle a downturn in the economy, but he says there's no need to panic. ATB chief economist Todd Hirsch says there will likely be more layoffs in Alberta, but he says economic activity is not slowing down as much yet as during the recent recession.
But I don't think there's any way to sugarcoat it. I think Alberta and Calgary, we are looking at a softer year for growth in 2015. I'm not prepared to use the recession word, but I do think that we need to brace ourselves for possibly some layoffs, possibly some slower levels of activity.
Major Canadian realtor RE/MAX says slumping oil prices are bound to have an impact on our city's housing market next year. The company's 2015 outlook shows the average price of a Calgary home expected to rise by only 3% next year compared to a 6% jump this year. RE/MAX says more buyers are expected to sit on the sidelines now to see if the recent slump in oil prices will make houses cheaper. It's now 7:35. Ottawa has quietly paid employment insurance sickness benefits to some women who fall ill during maternity leave while continuing to fight a multi-million-dollar class action lawsuit against others. That has two Calgary mothers involved in that lawsuit asking a lot of questions right now. While on mat leave in 2010, Carissa Casbaum became ill with a rare blood disorder. In 2011, Jen McCrae was diagnosed with breast cancer, she too on mat leave. Both Calgary mothers say they applied for EI sickness benefits. They were both told they do not qualify. Now they're both involved in a lawsuit along with about 60,000 women across the country. In each case, EI sickness benefits denied. A recent document filed in federal court in Toronto shows roughly 350 women who launched appeals in 2012 and 2013 have been paid sickness benefits, which is upsetting news to the Calgary mothers.
I was upset. I was very upset. They're well deserving. I'm really glad that they got the benefit and they didn't have to fight as hard as we're fighting now, because you shouldn't have to fight when you're sick.
I became a part of it so that other women and people on maternity leave, parental leave, getting sick, wouldn't have to fight with the government for a benefit that we have all paid into, that we are entitled to, that we all should have been getting since 2002.
The class action lawsuit is due in federal court next week. Time to focus on business. Business editor Mike Epple joining us now. Mike, a lot of people watching the price of oil. A lot of people looking to OPEC now to see if they're going to make a move.
Yeah, well, they probably should, considering the fact that this morning, Ted, OPEC put out its forecast for next year for global oil demand, specifically from the cartel, and they figure it's going to be the lowest demand level for OPEC crude in 12 years. Now, some of that does have to do with increased North American production, obviously, but their estimate on daily output is below 29 million barrels a day. That's about 1.5 million below where they're currently producing, and they've been overproducing for 6 months in a row. No surprise, the price for oil has done what it has done recently, and it's down another 2% plus this morning, back to $62 and change, and losing about $1.65 in the early New York trade. Now, this, of course, has ramifications for provincial budgets, federal budgets, the real estate market. You talked about that, and RE/MAX is saying that if, in fact, the oil price pressures persist, a lot of P's there, I get that, it will slow down the housing market. Let's face it, that it all plays into this. So we'll track that. And the benefactors, well, drivers, certainly. The flip side, too, the global aviation sector. The International Air Transportation Association in with its fearless forecast today, saying that the worldwide airline industry is going to make a profit this year of $20 billion. That's twice what they made last year, $11.5 billion, coming from North American airlines. Specifically, they're seeing a big benefit from the falling price for jet fuel. Haven't seen that play out too much in ticket prices yet. Hopefully early next year that'll start to happen. Big box retailer Costco, may as well call that the $300 store because that's how much you spend typically when you go in. We had the earnings in this morning. I'm talking about me specifically. The price of Costco stock hitting a record in the early trade this morning. Stocks up 17, or the earnings up 17% to almost $500 million. And they're raking it in on the bottom line. Sales up 7.5% at Costco as well. And they're also selling gas pretty cheaply, Ted. Back to you.
Thank you, Mike. That's business editor Mike Eppel. You can hear Mike on 660 News at 26 and 56 after the hour.